Hello and welcome to the Trading School. Ever wonder what time frame to use for trading, daily, weekly? Well, stay tuned and I'll show you what the difference is. Thank you. Hello and welcome to the Trading School for Beginners. Today we want to talk about a chart for weekly or chart for daily use. And why would you want to look at a day chart or a weekly chart? They're all the same. Not really. Well, first of all, someone could be working, don't have time to look at a chart every hour or so, half hour, or when they take a break. They could be in school, they could have meetings they go to, or the lifestyle that they live. So that's why we want to take a look at both day and week chart. For example, right now on the screen, I've got a 2-year weekly chart. At the bottom, it's showing dividend when they're paid. I'm sorry, and the earnings announcement made every quarter. So let's take a look at what we have on the chart here right now. This green line, which I'm emphasizing here at this point, is I'll show you what it is. It's a 9 period. It's not 9 weeks, but 9 periods of the chart. This particular bar here is 1 week. That's 1 week of travel. It could be, it could have started out very low and traveled just above maybe a few dollars. But in a 1 week period, 5 days, that's the trading range of this particular week. And the following week had a very, very tiny open to close travel time. So let's look at the red or orange moving average here. Here we have a 40 period moving average. That's 40 weeks and nothing more than a simple moving average. The green one is a simple moving average. So let's just make this quick and easy to take a look at. So here we have up and down motion. The general trend of this is in a down motion, and all of a sudden you look at this and you say, "Aha! We may have an entry point because we may be starting upward." So that's why I put on the screen this white line here as a possible entry, because it goes above and closes above the 9 period, which is 9 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. It's 9 days back, which is 9 weeks. So we may have, and we don't know what's going to take place after this. We see it on the bar or on the chart, but it could go sideways, it could go down, it could go up. So that's why you start out and have a good rule of trading. In this case, when it closes above the entry, in this case it would be 9 weeks, and it continues moving up. It comes back down. It does not go below the moving average. On this particular case here, it closed below, but we're going to wait one more day, or excuse me, one more week, just to make sure. And it could be one more day, because it could have dropped all the way down to this point here before it actually started out for the week. This is 1 week of travel. So in that case, I'm going to have a exit. So I've protected myself from the entry here, from here to here. That was 22% increase. So it's still below the 9 period moving average, still below. On this one closed, I was leery of this one because it's right on the borderline, so I waited one more day and then I missed it. I forgot to take a look. You can do this on the weekend. You could do it during the week. 2 or 3 times a week, but I know people who only look at a chart only on the weekend. So here we have travel down, 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 and I almost forgot about what I'm doing here. My lifestyle's so busy. So here we had a close on this particular week above the 9-period moving average. So from this point in time, it travels up, and here we have a close on this white bar here. There's a 17% increase. So all we were trying to do is protect what money we have, what capital, what gains we make. We don't want to lose a lot of money. You don't want to go in and say, I'm in this for the long run. I'm here until the duration. For the next 20 years, I'm going to hold this stock. Well, that might be well and good for some people, but not for everybody. So here we have the 9-period moving average just right on the border here. So I'm waiting for the next week. And this is the travel for the next week. Here it takes off, and sometime during the week, I decide to get in at 25.20. And right now I'm in, and we've got 2 bad weeks coming here. We don't know what's going to happen. It could go south, it could go sideways, it could go north. We don't know. So we're going to wait until it closes below this 9-period moving average. So let me take this off for a second. So the reason I just have the 200-day, or the 40-week moving average here is just as a reference. When I see travel from here, and it goes up and down, on to getting closer and closer and closer to the 200 period, or 200 day. I keep calling it 200 day, but it's a 40-week moving average. I say, we might be in trouble. I'm got to be very, very careful. Then it starts moving away. It still has some distance between where it's traveling and away from the 200 day or the 40-week moving average. So that's just as a reference, because but I'm using the 9-week. You could use 8-week. You could use 10. You could use 20-week. This is the one I like. I'm not saying it's perfect, and there's not a standard in the industry. It's just whatever you can stomach on your losses. I don't want to lose a lot of money. I want to keep every penny I can get my hands on. So let's switch this back to a daily time frame. This is weekly. Let's go to daily. It looks quite different now. Every candle, every bar is a 1 day 1 day of trading. So let's take a look here, move this back to a pointer. This is no longer a 40-week. This is what's called a 40 period, but I like to go back out when I'm trading looking at a chart on the daily candles. I move it out to 50 days. That's what I like. And there again, it's not a hard, fast rule. It's whatever you like. And this one, I'll move out from a 9-day. I like to use this as a 21-day moving average, but that's me. That's not everybody. I think I may have made a mistake on this one. There's 50. Yeah, it's 50. Okay. So if you're trading here, I'm going to use the green one as a entry point. So here, this would have been the entry point if I was trading on a weekly chart. But there again, it goes back to how much time can you look at a chart? How much time do you have to devote to this? I know a lot of people just look at a chart on the weekend, and that's fine. That's all well and good. They make their plans. They place their orders for entry and or exit based on where they expect the movement to be. This particular chart is UBS. Let's take a look here at one more I had on my list. This is Abercrombie and Fitch. This is what I call very smooth entries and exits, possible exits if need be. But it's a really good, not erratic line movement. So we got the general direction. This is over about 5.5, 6 month period. That is not bad at all for a movement. The lines, the moving average lines are fairly close together, and then they start getting more and more distance here. So when that happens, the wider the distance between these moving averages and the height of the bar or candle, you might want to start looking at, well, I need to pay close attention to this one because it could run back down. Not quick, but it could. We don't know that. Here's one more before we finish. And ConocoPhillips, very, very erratic. Of course, there again, this is an oil stock. And we always know there's a lot of ups and downs based on geopolitical references in the world. So I just have this particular rectangle on here. I've been watching this for some time. I'm waiting for things to smooth out. It might take, another 6 months. We don't know. But it's basically going sideways at this point in time. You can see a lot of ups and downs, but the general direction is sideways to now we're starting to trend down. So let's see, I got one more maybe. Let's see if I look at this one. FedEx, and there again, look at the drop in this one. Some people don't like, or they start getting nervous around the earnings announcement time. Put this on here. This particular stock, FedEx, had a very bad earnings announcement. So you can see it fell all the way down to 246 from 280 just overnight. Not good. So with that being said, you have to find your own way, what you like. Day trade, weekly trade, look at the chart, both day and week to find your direction. Look at the overall trend, look at a stock that's very erratic in this particular case. So any questions on that, be sure and make a comment in the field below. If you like what you see and hear, hit the like button and also subscribe. As you do this, it will encourage others to take a look at it also. So that being said, I'll catch you on the next one. Take care and bye now.